ZoomInfo strikes me as an unrivaled company. The question is now the time to buy the stock? Today, we're talking about ZI stock. You look at their financials, fantastic financials. You're looking at fantastic growth rates, under 300 million in revenue in 2019. Now they're talking about over $1 billion, and they're saying, hey, we're well on our path to $2 billion, significant profit margins, fat and growing profit margins, and real free cash flow. This is what I like to see from my prospective investments that I'm considering. Look at ZoomInfo stock. Despite strong results, stock really hasn't gone anywhere over the last 2 years since they've gone public. 1 point up over 100%, down 1 point down slightly. Now it's up around 30%. The question is now the time to buy the stock? Also, why are they delivering such strong results? Looking at 54% growth in the most recent quarter, 42% organic growth. So that difference is driven by acquisition. So why are they growing so quickly? Well, the problem they're trying to solve is to help a company's sales force know if it's going after the right leads. Do you have the Glengarry leads where you're saying, hey, is this the decision maker for the company? Will they be able to actually buy this product that I'm looking to sell? Can I reach this contact? How do I reach it? Are they even still with this company? Is this company within my territory? So a lot of very relevant data that the sales force needs to make a decision. So that's where ZoomInfo comes in, saying, hey, it's our business to grow yours. Get the best, or get the business to business data and software you need to connect with and close your most valuable buyers, used by over 30,000 businesses, including Google, Zoom, T-Mobile. And so once again, we're talking about ZoomInfo. ZI is the ticker, and they are ranked based on third-party marketplaces, effectively saying, third-party review sites, effectively saying, yeah, this is the number one for lead intelligence, number one for market intelligence, for sales intelligence. This is becoming a critical tool for a lot of different businesses. So how do they do this? So this is about using artificial intelligence, where they aggregate and extract distinct types of data, such as revenue, locations, technology, so like what products are customers potentially using, keywords, contact information, including email addresses, titles, phone numbers, and many others from millions of public and proprietary sources. So this is effectively like a Google, a search engine for businesses to look up, and the sales force to say, hey, is this person potentially a well target? Is this a target that I want to go after? And so, maybe they're using a technology from a competitive player. Okay, so maybe that's something we want to look into. Is this even still with the same company? And they say, look, there's a lot of data here that we're going to provide. We're saying we're providing at least 95% accuracy here based on our artificial intelligence and our research scientists sort of scrubbing the data. And so not only do you have this data at the fingertips for subscribers, and this is a subscription-driven business, but the customers access these insights directly on their platform, but then they can integrate the data and insights directly into their sales platform, whether or not it's a customer relationship management system like Salesforce or sales and marketing automation systems. So that way you can have the information right there, and they're offering more and more products like the ZoomInfo chat, so that way you can directly chat with the customer based on the information that you're seeing here. When they talk about competition, they're saying there's no competitor who offers a sales, marketing, operations, and recruiting intelligence platform as comprehensive as ours. That turns me on hearing that, sort of saying, okay, you're not really seeing real players, that are delivering what they have, measurable, that ultimately drive measurable revenue improvements, accuracy, depth, and coverage of data, unique data points to leverage insights, and a platform that can be integrated and automated with a variety of CRM. So this is getting plugged into a variety of different sales platforms, marketing platforms, recruiting platforms. So this is going to become even stickier because it becomes a data source that you're using within a source that you're already considering to be vital, like a sales tool. They do talk about, in limited circumstances, they do see some competitive vendors. That talked about LinkedIn, Dun & Bradstreet, and TechTarget, in some degrees. So overall, is this company unrivaled? Well, let's look at some of these companies that they call out. TechTarget, much smaller than they are, only growing at half the rate. Okay, so that would suggest to me if you're growing at double and you're much bigger, then you're doing something right and your competitors aren't. And then you look at Dun & Bradstreet. Dun & Bradstreet is a bit bigger than they are, about double the size, but they're only growing at around 3% or low single digits. So once again, these data points suggest that what ZoomInfo is doing is unrivaled, that they have a product, they have a go-to-market solution that is rapidly taking market share, and they're addressing a very big market opportunity. It's not just about, let's say, potential targets in North America. This is expanding from North America to international, having effectively say, hey, maybe this is about recruiting, finding the right talent, or being able to chat directly with end customers. So you see that the market opportunity now is well in excess of $100 billion. That's what they're targeting. Originally was just a sales orientation. Hey, let's just help the sales force, but slowly but surely expanding from sales to operations, marketing, and talent. So big addressable market. The question is, where does ZoomInfo stock go from here? If you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. In full disclosure, this is not financial advice. So I look at what's going on here with ZoomInfo. You have Henry Schuck. He founded the company. He's working with Cameron Heiser. He's the CFO. The CFO previously worked for Easy Software Group, so was the CFO there. They sold to SS&C for something like $1.5 billion plus, deal. So I'm looking at past successes, founder-led. This is what I like to see. I also see that Henry Schuck, founder CEO, is only 38 years old. This once again suggests a long runway if he remains engaged with the business. So far, this is what I like to see. A subscription business, fantastic growth, significant revenue retention, 116%. So the business would have grown 16% even without onboarding any new customers. And yet they are still rapidly growing new customers, have around 1,800 large customers, tens of thousands of customers in total, and they're generating real free cash flow. This is a business that I like to see. Looking at the employee base, overall seems like employees are happy. However, I am seeing some mixed reviews from some smaller customers sort of saying, hey, there's some contract lock-in clauses. These are unethical practices. I didn't want to get billed again. They're talking about decent product, but they had absolutely horrible service. And this is, keep in mind, on Trustpilot, where Trustpilot's supposedly easier to remove bad reviews. So for them to have such a mediocre or poor reviews, this isn't thousands, but 40 of them, or a lot of them are quite bad. It is something to be mindful of. They talk about, some people are saying, well, wait a second, I don't even know how this company got my personal information. Are they doing this in a fraudulent way? Another person saying they're not GDPR compliant, a European regulatory requirement, sort of saying, hey, you need to be respectful of privacy laws. Is ZoomInfo actually doing it? The reality is the world is a very messy place when I look at these, types of complaints and poor reviews. And, you look at Dun & Bradstreet. Dun & Bradstreet had a huge data leak just a few years ago, over 30 million records that were lost. And here it is. It's still a large company, $6 billion market cap, still generating lots of sales. And so I look at this and I'm thinking, you know what? The world's a messy place. I think, that it is possible you wake up one day and maybe there's a problem with ZoomInfo and maybe how they're doing it, and there's a lawsuit. But I don't think it's going to be something that kills the business. It's more like, oh, that'll create some indigestion for shareholders, or maybe even a buying opportunity if it sells off significantly. And I suspect that as long as ZoomInfo or ZI stock continues to have thousands of favorable reviews on independent sites like G2, where customers might say, hey, the downside is the price is high, but it is the best. I think as long as you're still getting reviews like that, and here it is, this is a verified current user of ZoomInfo. You can see it on G2 website. I suspect ZoomInfo will continue to keep on winning. So looking at their results, trying to think about a hypothetical valuation framework, currently around $45 share price, over $18 billion market cap. The question is, where does the stock go from here, growing once again around 50% this year? I think long-term, you're probably talking about profit margins around 30%, give or take. You do need to factor in that they have over $1 billion in debt, so there is sizable interest expense. Slap on some sort of tax rate. And, you can see this business is still trading at a very full valuation, 16 times forward sales. If you were to think about profitability, and keep in mind, they're nowhere near here that today when you're thinking about their current true earnings. And I'm not talking about free cash flow here. Free cash flow will be higher because they have significant stock-based compensation. But thinking about the earnings of the business, it is trading at arguably a very full valuation. The question is, what's the growth rate in the years ahead? And I look at this and I think, in order for investors to have an adequate return over, let's say, the next 5 years, this company is really going to need to deliver continued exceptional results. Not only 55% growth this year, but over this ensuing 5 years, they're going to need to deliver, let's say, 30% annualized growth, in the years ahead, and end with a 30 times N multiple and a 35% operating profit margin. So if you're able to get all those things, then you're effectively penciling out around 100% upside over the next 5 years. Once again, hypothetical valuation framework. Of course, the stock price can go way higher, way lower, depending on execution. I personally look at this and think, well, what if instead of delivering closer to 30%, it's closer to low 20s? And 5 years from now, they only value it at 20 times. Well, in that case, over 5 years, you're looking at a significant haircut. I personally, maybe 30% downside over 5 years. So when I look at this, it's always important. My first focus is always, what's your value proposition? So that's the first, thinking about, do you have something special? Are you unrivaled? Then I look at the growth. Are you tapping into something that's much bigger and a long runway for growth? So I'm looking at those components. Value proposition, unrivaled, hence the name of this channel. And I think ZoomInfo is unrivaled. Clearly delivering on growth, clearly have a lot of clever tuck-in acquisitions that they're monetizing at good rates. But then that valuation is the last key component I always want to see, and I want to see all three of those line up. And I want a valuation where the hurdle for me to say, hey, this is going to be attractive return, doesn't have to be too high. When I'm looking at this, the hurdle for this to be an attractive return is just a little too high for me at this point. And given that they are just starting to talk about, on the most recent conference call, that they're talking about an elongated sales cycle. Now, keep in mind, they're selling a software product that costs, between $10,000 and $20,000 to access this. You're looking at something where people might say, hey, given a tougher economy, maybe we're not going to be making that purchase. Maybe we're happy with our existing leads. We don't need the Glengarry leads from ZoomInfo. And so, I do look at this and think, man, if they have one quarter where they sort of whiff, this stock is really prone for significant downside risk. It would not surprise me because it trades at that 16 times forward sales multiple. So if you see any sort of miss in the upcoming quarters, which management sort of said, hey, we're raising guidance, but we are starting to see this elongated sales cycle. If there's any sort of miss, maybe 30, 40, 50% downside, just given, how it's currently priced. That said, long term, it could very likely, it could be a winner. It just depends on, hey, can you get it at a compelling valuation? At this point, it's just not quite there for me in terms of valuation. I would like to revisit this, though, at a much lower price. It's just not there yet for me. I mean, it does strike me as an unrivaled company, and it has a lot of things I want to see. I want to see hypergrowth. I want to see fat profit margins. I want to see founder-led. I want to see free cash flow. It's delivering on the things I want to see. Just that last component, that valuation, that's just a little tough for me at this point. If you enjoyed this video talking about ZoomInfo stock, ZI is the ticker, please make a point of hitting that thumbs up, hit that subscribe button, and thank you for watching Unrivaled Investing.